Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation. Asian session live market analysis on September 6th, a new week between 5 and 5:30. I am going to just review the market along with you, and for that I'll be using the live market quote page, and the link for the same I have given it here. You can open it in a browser. I have fixed the camera over the live market quote. I fixed the camera over the live market quote page. Now currently you can see that euro is trading around 1.2894, 1.2896. The low is 1.2872, the high is 1.2902. 70 pips positive net change is seen. And you will be wondering that it was closing around on Friday 1.2883, and how come it is showing about 70 pips positive net change? Because the interbank treasury takes the last 30 minutes trade, and probably there could be some wild moves on that if they calculated the average level, and that could become the Friday close level. From there they have shown the current level of 70 pips gain. So similarly in the case of GBP also 69 pips positive net change is seen, and during the start of the day itself we come across the market is holding high. And what could be the possible moves we could expect today? So let us review all other currencies also. USD yen is trading around 84.33, 84.36, and 84.08 is the low, 84.47 is the high. 5 pips positive net change is seen. It's a very nominal gain. And on Friday, you would have noticed that after the non-farm payroll, the market made some volatile moves and confused the traders, subsequently gained the levels in the case of euro and GBP. And as soon as the data was released, they just gained the levels in the case of denominator currencies as if USD is going to gain, and subsequently they had dropped it back and gained the levels in the case of euro and GBP. So this sort of havoc they try to do it in order to handle the cross. So we need to understand what is the real intention and then accordingly try to take the positions. So we should not be carried away by that of the quick moves what they do it in the market, and such quick moves they initially make it as a false move and later on they make the intentional moves. So the real intentional move ought to be identified, and that real intentional move you can see it whether the gains were sustained in the case of the denominator currencies for more than 30 minutes. No, not at all. So they just evaporated all the gains. So that showed that they made an extended upward stop and then dropped it again. So this way you should be able to identify and then try to take buy or sell positions. And in the case of denominator currencies, they simply gained the levels and sustained it for some time and then subsequently come back. And you find in the case of USD CHF now it is about 28 pips positive. 20 pips positive net change is shown. So that shows that Friday closing was much lower than this. So they went up to 1.02 and then again came back. And you find now Euro, GBP, USD and USD CHF all are showing positive net change as a typical contrarian move. And you know that it is a holiday, labor holiday in US. So obviously the market is going to show some thin volume conditions, and probably the players could make use of that particular time to handle the crosses. That is what implied when they are just showing the contrarian moves in the case of the four majors, Euro, GBP, USD and USD CHF. So they could probably gain the levels and then again drop as a contrarian move, and during the European session they can show all in red and again they can gain the levels. That sort of moves they could make today. Then in the case of USD CAD, you find that it has dropped from that of 1.04 area to 1.03 area, and so it is holding around that of the low 1.0378. And Australian dollar which is currently trading around 0.916467. 9145 is the low, 9178 is the high, and the positive net change is shown as 55 pips. And many people were thinking that once the interest rate announcement is there, then Australian dollar could drop and that could give the way for euro and GBP to drop. But players are very, very cunning and they don't just like that make such drop in tandem with that of the market expectations. So we have to always keep it in mind. Sometimes they make moves in tandem with that of the market expectations, and certain other times they make the move against the market expectations. So they create the market sentiment by making one or two times the expected market moves and then subsequently make their own move opposite to that of the expected market moves. So obviously you find that the traders get trapped by becoming bullish and bearish, and this you have to avoid it, and you have to see whether they are trading near that of the low or trading near that of the high, and then accordingly take trading decisions. And the focused algorithm helps a lot in order to take a decision with regard to the trading, whether we can do a sell and buy trade or a buy and sell trade. And you know that when euro was trading around 1.26 and GBP was trading around 1.5, below 1.54, and many were very skeptical and they said that there is a great potential for them to drop it, and probably they thought that non-farm payroll could be used as a trigger and they wanted to drop. And when non-farm payroll was more than expected, that is, it is positive, then people thought that USD gaining moves will be shown, but they simply said risk appetite move. So this is how when you expect USD gaining move, they can show risk appetite move of gaining levels in the case of euro and GBP. When the US data is negative, people might be thinking that okay, it is going to be USD weakening move, but they can simply say that it is a risk aversion move and try to drop euro and GBP. So they use different terminologies, but why they use such terminologies? Mainly to create the market sentiment and act against that of the traders. And when you think that, okay, it is a risk aversion move for probably at least for about 4-5 days, there might be some risk aversion move. So people will become skeptical and think that, okay, euro and GBP are not going to rise it. In a matter of 1 or 2 hours, they simply rise it and say that somebody has spoken, that which has become hawkish, and obviously they gain the levels in the case of euro and GBP and say that again risk appetite has emerged. So if you think in a common man, can the risk appetite and the risk aversion can alternate in a few seconds or in a few hours? It is impossible. When a person is frightened, say for example, you have taken a position in the market and it has made a huge loss, and then obviously you cut the position, you hesitate entering into that of the market. You don't develop risk aversion and quickly develop risk appetite again. But whereas in the market, they do it that way so that the traders become stunned and then they do emotional trades. So these are all the tactics the players use in order to trap the traders, nothing more than that. So if you go by their wordings, etc., then obviously our mind will be crippled with that, and we may find later on that we have been taken for a ride. So keep all these things in mind and try to take a trading decision. And so here you come across that Euro, GBP, USD Yen and USD CHF are all showing positive net change, and USD CAD is showing negative net change as USD weakening move, and Australian dollar is showing positive net change as the USD weakening move. So excepting USD Yen and USD CHF, all other currencies are showing the USD weakening move. So let us see what could be the possible move for today. Let me focus the camera over that of the line, the slide. So expected market moves for this session and for the remaining day. Japanese session swing and slide moves are expected. A nominal slide could be seen and they could make a brief downward stop and below that of the low in the case of Euro and GBP and not a very significant drop. And during the European session, they could make a dip, and that can only give you a buy opportunity. If you just fail to buy, then probably they could gain the levels again. So sell and buy trade might not be very wise, but if you want to take positions, you can wait for the early European session, and when they dip quickly, watch that new low has not been breached for more than 30 minutes, and then try to take a buy position. And that will be a wiser trade. Then subsequently during the late European session, they are expected to gain the levels, and during the US session, you know that it is a holiday in US, but it is not necessary that the market has to be subdued during that time. They are expected to make a brief dip and again gain the level slowly during the day. And tomorrow, that is 7th of September, they are expected to open high and gain the level during the day. And you will come across in this particular week, most of the days, less drop and more gains could be seen in the case of Euro and GBP. And in this particular month, as I explained earlier, in the month of September, we could come across all the last levels are being gained back by Euro and GBP. You know that Euro went up to 1.33 and GBP went up to 1.58 and 1.60 also. And those levels could be seen in Euro and GBP. But with regard to the denominator currencies, they are expected to drop less and gain less. So as a result, you could come across they are in a range bound moves to start with, especially USDN and USD CHF. Then subsequently, they are also expected to gain from the third week of September. So till this time, we may have to bear with them, and they may gain about 100 pips and lose 100 pips, and that sort of moves could be seen. But sell and buy trade is very risky in them, because if you try to take a sell and hold it, suddenly they may reverse it, and you might be trapped with the lowest level sell. So it is not advisable whenever the currencies are in extreme level to do at the lowest level a sell and buy, at the highest level a buy and sell trade. And you would have seen that when euro is around 1.33, a buy and sell trade would have been a disastrous, even though many were talking bullish at that time. And similarly, in the case of USDN and USDCHF, sell and buy trade could be very, very risky. Suddenly, if they reverse and gain the levels, you might be trapped vulnerably. And if you use the stop, fine. Otherwise, it could erode your usable margin in a very significant way. So it is a weak beginning. So because of the US holiday, you come across a little bit of volatile moves and the gain. And tomorrow they could make some weak beginning false moves after gaining the level. So they could come back to that of the same levels what you come across. But they are not going to give up the levels what they gained in a very significant way during this particular week. So according to me, the dips are buy opportunities in the case of Euro and GBP, but not during the rise. Then let us see the initial lows and the highs which are set during this particular day. So Euro has formed the low is 1.2872, the high is 1.2902, and currently 1.2902 is the high. So they have breached the high by 2 pips. And in the case of GBP, 1.5427 is the low, which is intact. 1.5466 was the high, and they have breached the high and formed a new high, 1.5477. So they could gain little more level and then make the slide. So obviously they will come back to the current levels or little lower than that, not in a very big way. A drop could be seen. And in the case of USDCHF, 1.0153 is low. They formed a new low, 1.0142, and the high is 1.0182. So especially with regard to this CHF, and they are making consolidations here, and it might be a patient testing game if you try to do a buy and sell trade. So avoid taking positions in it and let them just gain the levels and come out of this particular range, and afterwards probably I could suggest once it goes above that of 1.0350 area, then you can try to do a buy and sell trade, not before that. And in that process, you will find that you might be holding the position for a longer time for a lesser profit, and that is not our objective. We wanted to earn as quickly as possible and think of another trade. Then USD yen 48.08 is the low and 84.08 is the low, 84.77 is the high. Both are intact. And in the case of Australian dollar, 0.9145 is the low, 0.9163 was the initial high, and they breached the high and formed the new high, 0.9173. So you can understand that they are slowly gaining the level to start with. And in the case of Canadian dollar, 1.0387 was the low, and they breached the low and formed a new low, 1.0378. The high is 1.0412. So you find that in the case of Euro, GBP and Australian dollar, they have breached the high, and in the case of CHF and Canadian dollar, they breached the low, and USD yen, they have been holding around. So you can understand very less volumes are seen in the case of USD yen. It's better to avoid taking positions. So these are all the initial lows and the highs we come across today. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and answer to the questions which are asked here. In Jan, the focus for USD CAD direction. So USD CAD is expected to dip little more and then later on gain the levels. Probably it can go to 1.0325 or 35 area and then subsequently gain the level slowly. But again, denominator currencies, buy and sell trade will be a patient testing game. And see, basically as a trader, you should not simply think that, okay, it is at the highest level, so let us take a sell, or it is at the lowest level, so let us take a buy. That might work in a stock market, wherein a delivery-based buying is possible. Whereas in the case of the currency market, you don't come across the delivery-based if you are going for a leverage trading, unless and otherwise you go in for a currency conversion trade. So in that process, once it is a very good level in the case of USD CAD and USD CHF, going for a currency conversion trade, but not for the taking a leverage position. And if you take a leverage position, and it will take about 4-5 days for it to gain at least 100 pips or 150 pips, and you will really become nervous and continue to ask every expert what is going to happen to CAD. What is going to happen to CAD, and you will be only focusing on it and leave rest of the great opportunities in the market untouched. So avoid that. So you have to be an opportunistic trader, and you have to think of a possible currency which can give you a quick profit, rather than thinking that it is at the lowest level, let me take a buy, and then probably you may have to hold it for about 15 days to 20 days. Only then you can see about 100-150 pips profit, and they make a teasing move of dropping it further down and show it closer to parity and things like that, and you become unnecessarily nervous. So we are not here to become nervous. What is the big idea or what is the big deal? Does the nervousness give a kick for us like a liquor? No, not at all. So we have to think that there is no point in taking positions in such currencies, and that is why I told you in many of the occasions that focus only on Euro and GBP, review all other currencies, but try to trade or take positions only in Euro and GBP, because they are currencies showing good volatility in the market, and we should be able to capture such volatilities as trading opportunities. So whenever there is a quick drop, you can buy it, and in a day or two, you will be able to see a substantial profit. And I recommended many of the people to buy Euro at 1.26 and 1.27 area, and they are all very happy now. They are seeing that it is almost closer to 1.29. Whereas if somebody has taken a position in CHF, we'll see that it is hovering around the same level. Somebody has taken a position in yen, it is hovering around the same level. There is no profit booking opportunity. Then why to think of such currencies and taking trading? You can review it and analyze it and participate in discussions, but not good for trading. And Francisco, will gold make new high for this week? I am not thinking that gold could gain more, and it is expected to slide in this particular month. Probably intraday they may just do some stop-ins, or before the session starts they could gain the levels like on Friday, how they quickly gained the levels and dropped as soon as the US session opened. That sort of moves they could make it. Alex, how is better to treat holidays according to Australia? See, it might be a holiday in one country, but the currency market is still active in other countries. So sometimes the currency market, when the volume is really lacking, it may make subdued moves. But certain other occasions, when currency market, when the traders have taken pending position and traders have taken positions and there are pending positions to be closed before the end of the day, then they could make really some good moves in spite of the holiday. So you don't always relate it, holiday means in volume. So we have to watch physically the US session and decide whether it is going to be a thin volume. In first 30 minutes itself, we can understand whether it is going to be a thin volume moves. Then in that case, we just close the platform or just attend to some other work. And in case if they are showing a little bit of volatility, understand that the pending positions have become unfavorable for the traders and they could make good moves. And you can try to do trade during that particular holiday time also. So, what is your forecast on? I don't understand the question. Good job. Is he appreciating or criticizing? I don't understand. Then Nagala. Where do you see USDN this week? USDN will be hovering around the same level. Not big rise is expected. I mean the forecast of GBBN. Okay. GBBN, as I told you, yen they are holding and they may not make any significant rise or a drop. And only whatever the moves you come across in Euro and GBP, which will be reflected in yen, and which will be reflected in yen, Euro yen and GBP yen. So instead of taking Euro yen and GBP yen positions, you can straight away take Euro and GBP position, because the same amount or quantum of gain or the loss are expected when USD yen is almost holding flat, making sideways moves. So in the case of Euro yen and GBP yen, and any dip below that of the low, you can buy, and any gain above that of the high, you just book profit. But don't do sell and buy trade. TTP. What is your review on Australian dollar? Do you see the rise in maximum potential? Do you see it going to 0.93? Yeah, Australian dollar, you know that all the commodity pairs, they lead the rally and lag behind. I explained it many times. So they are now leading the rally and they are moving forward ahead of Euro and GBP. And slowly you will find they will lose the momentum and consolidate. But you cannot do immediately sell and buy trade, and they may make a consolidation around 92-93 area in the case of Australian dollar. But if you try to do a swing, sell and buy trade, you may not be able to get a nice profit. So whenever they reach the peak, don't immediately think of sell and buy trade. That's a very wrong approach, because the players, they try to see that they hold high and distribute the positions. And during the distribution of positions, anybody is trying to take short, they gain the level little more and then induce them to do the short covering, because the short sellers are the first one to come to buy at the highest level. They know very well. So if you immediately go and sell, then you will become a victim and do the short covering. So that is many of the traders have got a tendency that okay, euro is around 1.26, let me buy. It has gone to 1.27, let me do a sell and buy trade. So that is a very wrong approach. It might be working in a stock market, but the same strategy cannot be applied in currency market, because currency market volume is huge and it is a 24 hours market, not like a stock market for about 6 hours, 7 hours, etc. So obviously, for a prolonged period, they have to consolidate at a higher level, at a lower level, and try to do an upward stop and or a downward stop at the lower level. And only after distribution of the position at the higher level or accumulation of the position at the lower level, they are expected to make the next move. So till such time, you have to patiently wait. And instead of taking a position and waiting for a long time, you wait for a good opportunity. Whenever they make a quick upward stop, and at that time you try to take a sell. That will give you a good profit. And whenever they make a quick downward stop, and you try to take a buy, that will give you a good profit for you, rather than simply taking a position as soon as you open the trading platform. And that shows that you have become addicted to trading. Any addictness is not good. Then Anurag, will Euro GBP consolidate at the current level? Euro GBP has come to that level of 0.8336, 0.8339. The high is 0.8352, and you find 8 pips positive net change of 3. So they could make an upward stop above that of 83.52, and keep in mind about 20-25 pips. Whenever they show a new high and the new high has not been breached, then you try to take a sell position. Then always keep a hedging to limit the risk. Yeah, I'll explain the forecast slide. Then DTPG. For this week, do you see equities rising more like forecast for GBP? No, equities are expected to make sideways moves, and don't think that always they will make moves in tandem. And only in the month from third week of September, you will come across significant gains in the case of equity market. And equity market is expected to gain in the month of October, November, December, and January, February, March of next year. So if anybody is interested, and during the dips you try to do delivery based trading, and only the index stocks you try to take positions, and in futures you can take positions. Whenever you come across the futures showing a discount, you try to take a position, and then subsequently you will find the market is gaining, stock market is gaining significantly in this particular portion or quarter. Then Faisal, can you explain about, I don't know about Monopoly's prediction. I was listening to the webinar sub, and the net change 75 pips is applicable to all sessions, or it's applicable only to the first. See, net change of 75 pips is shown. Beyond that, it is not dropping further down. So there is a great potential for reversal. And if they go beyond 75 pips, then probably they could make the intentional move of further drop. So don't think up to 75 pips, if they drop it, it is not really bearishness. They could extend the move downwards so that the traders will start selling, and then subsequently the players buy, and the next session they can reverse. So what is the outlook for gold? Gold is expected to slide. FX war. Can you please explain your view on inter-market relationship between stock market USD? See, according to me, there is no relationship between markets. And sometimes the money flow from one market to another market, but that sort of money flow is about 20 to 25%, and not all the money. And you know that in all the markets, the players have to take positions and they have to book profit in their positions. So you know that it is not only the three markets what you consider as the stock market, commodity market, and also the currency market. You know that there are respective derivative markets also in each. So the derivative market in stock, derivative in commodity, derivative in currency markets. So like options and futures. So in all the markets, the players have to play, understand how much of money they require. So even if they pump in billions of money, they may not be able to control all the markets effectively. So what they do is they choose a particular market, hold the rest of the market. Say sometimes you might see that currency market becomes subdued and they simply hold the market and they start gaining the levels in the case of gold. So why they have to gain the levels in the case of gold? In order to offload or take sell positions. So they hold, and whoever is coming for a buying, they distribute it. Then subsequently, they let loose the market, and the market makes a free fall. Then obviously, the players take out the money when gold is at the highest level, not at the lowest level. So when gold goes to 1,250, when gold has reached 1,250 to 55, then they just book profit in all the positions, and also they take sell positions and let loose the market. The market slowly slide because it does not gain because nobody is supporting it. People try to buy it and later on see after 2 hours it is dropping further and try to average it, it is dropping further. That is how they will see it. And at one time, about $20-30 drop, they will try to give the support. And when they know that the traders start selling, they will try to give the support and quickly gain the level. That's what happened on Friday. From 1,255, it came to 1,238 when the traders started selling freely and it went up to 1,250. So that is how they try to make the moves. They support it and take it out. So when they are struck in the gold market, then obviously they will not be able to be very active because after all it's human and it is not robotic. And as many people say that robotic trades are happening, I tell you honestly, when people have invested billions of dollars, they will not leave it to your robot to control their money. And probably a lot of articles and other things might be coming, and they are all just to misguide the traders. And you know that there are many reports that the market volume has become 4 billion. And if you see in FX Rate CEO blog, there the split has been given. And in the spot market, only about $1 trillion is being used for making swings. And other markets, you come across more money is being deployed. So in that also, the circular trade is two-thirds. And understand how much of people are there in the stock market, how much of people are there in the spot market. So obviously the volume has come down. So when you take the overall volume, it is a misguidance. If you split it, then you will be able to understand then how exactly the volume has drastically come down. Because those who have been doing actively in the actively in the spot market, they are migrating to that of the futures market because they wanted to take less exposure like options. So just to take an option that euro can go to 1.30 and just invest about $300 and see whether it is able to give a profit or not. And that sort of gambling tendency is coming in rather than making a real asset class trade. So it is extremely difficult for anybody to say that the money is flowing from this particular market to another market. And probably it might appear flowing it and the very next day you may see that it is reversed. But the players are well informed, so they know how to handle it and they focus only two markets at a time and try to just earn there and distribute the positions or accumulate the positions depending upon the conditions of the market. Then they take out the profit and also some of the investment and put it in the other market and rake the other market. So since it is being handled by human, obviously you will come across there will be a delay in the execution. So they have to come from one market to another market to third market, etc. So all markets cannot make spikes and volatile moves all the time in DDPT. Euro and GBP, did you say it is not wise to do a sell and buy trade? Yes, Euro and GBP, it is not wise to do a sell and buy trade because the lows they may show it at a brief time, and if you fail to book profit and your sell position might be making loss. So why to take such high risk trade? And instead, you calmly wait whenever they show a low and the low has not been breached for more than 30 minutes or 10 to 30 minutes, then you can try to take a buy position. And once the position makes profit, keep profiting. Then USDN, I already explained that it is not wise to take positions there. What is the big deal in taking position and simply waiting? In FX work, I understand they have only X amount of equity. Yeah, obviously they have only limited money for market rigging. See, no billionaire will invest all his wealth in market because if anything happens to the market, he will come to street. So obviously nobody is going to do or take such a type of risk unless and otherwise they are under distress condition. So obviously they will only invest a portion of the money, and you know that most of the billionaires they always going for diversification of the risk. So they put the money in different type of investments, and all the money they will not put it in the market. So whatever the money which is being used in the market and it is used for several trades, then it becomes trillions. So if you actually calculate the amount which is invested in the market may not be in trillions. The amount which is invested in the market might be in billions or millions, but when it is done within a day about 500 times, 1000 times circular trades, then it becomes trillions. Then are they daily picks? Limit controlled, regulated, maximum possible moves each pair. To a certain extent, they are all regulated and they are all guidelines given to the bank. So they have to adhere to that, and the players use the bank dealing room for their market operations. So obviously, they also comes under the control of such guidelines. By end of the month, what level do you expect by Euro and GBP? So I explained that Euro and GBP could gain the last level 1.33, from there it has dropped, and 1.60 from there GBP dropped. So they could gain back those levels. What could be the high in gold before it goes down? See, it is very difficult to estimate a high because if there lot of stops are there around 1270, thinking that 1265 was the high for the season, and if there are plenty of stops, the players don't mind going there and hitting the stops. So is it easy for us to estimate the high? And even any type of analysis, you try to use it, you may find that it is a strong resistance level, and immediately all will keep the stops above that level. And you mean to say the players are going to just respect the resistance and wait, not hit the stops, and they get it like a hot cake, and they will try to hit all the stops in one go during the gap time or during the start of the session, and try to hit the stops and earn all the money and then come down. So don't try to think that we can estimate what could be the high and what could be the low. And if you see on a daily basis, the supports and the resistance continue to change from time to time in any sort of analysis. And how can the support and the resistance can change? Support is a support which is supposed to be held very firmly. And you may call it as a weak support, moderate support, strong support, then we don't call it as support. In DTPT. It is advisable to convert USD into AUD and about 0.89 level to earn the high interest yield. What is your view? Already AUD has gone up, sir, and you could have done it when it was around 0.80 level, then you would have earned quite a lot. Because when you go in for a currency conversion, unless and otherwise you have got a good rapport with the bank, they are going to give you a quote which is about 100 to 150 pips or sometimes 200 pips away from the other market. If you want to buy Australian dollar, they will say straight away it is 0.93. And if you want to sell Australian dollar, they can say straight away 0.89. So that is how the bank rates are quite different from that of the market rate. Unless and otherwise you have a good understanding of the bank and if they are able to give you the actual market rate, then you can go in for a currency conversion. Otherwise, it is a waste of time because on the sell side or the buy side, if you lose 200 pips and if the market gains about 600 pips, bank will earn 400 pips, you will earn only 200 pips. So everywhere they have got a catch. Understand that the bank, whether you lose or gain, the bank wanted to gain. So that is the scenario. You have to understand that and then talk to the bank dealers because the dealers might say all out they wanted to help you out, but they want to grab your money. Keep that in mind. And you have to be a smarter person, understanding and reading their intentions, accordingly make wise decisions. And many of the banks, they also in the deal room give the calls and sometimes they say that you better liquidate your long positions. Better you just try to take a sell and buy trade because technically it is going to drop and that sort of guidance they will give. One or two times it might work. Third time onwards you will be trapped vulnerable. So always read the intentions of the player when they are freely willing to help you out. So if there is no money deal and if somebody is giving you a free help, then you can understand, okay, there is no money deal and he is trying to help, you can understand. And still you have to review it and only then accept it. But if there is a money deal and then in that he is trying to extend a helping hand, read the real intention. Because the world has become such a cunning place wherein people are here to grab the money of other people. Because they want the money to multiply into money without any effort. Let me go back to that of the PowerPoint presentation. So, the expected focus for today, Japanese session swing and slide moves. Little bit of slide could be seen. European session, a quick dip and then gain could be seen. And rise could be seen. Then US session, again a dip and rise moves are expected in spite of the US holiday today. And initial lows and the highs, you find that Euro after cutting the high by 2 pips, it has not gained. And similarly, GBP after cutting the high, it is holding above that of the initial high, 1.5466, but still not breached the high. Then Yen has not either gone up or down. Then USD formed the low 1.0142 and it has not breached further down. Then Australian dollar high has been breached and it is holding above that of the initial high. Then Canadian dollar, it has breached the low and holding below that of the low. So it could come across till 6630 GMT, little more gains in the case of Euro, GBP and Australian dollar. Then probably they could make the slide and then dip little bit during the early European session and then gain the level. So wait for the dips and then try to do a buy and sell trade in the case of Euro, GBP and Australian dollar. Avoid taking positions in the case of denominated currency at the moment. So I take this opportunity to thank FX Trade for the good cooperation and understanding, and to you participants who come here to listen and learn how to do effective trading in the market. And we will again meet tomorrow and continue doing Asian session live market analysis. Meanwhile, I'll post it in the blog and give any if there are necessity or if there are necessary situations, then I'll try to give the updates in the blog also. Thank you one and all. See you tomorrow.